It's finally here, my first live trade video. This was a trade on the New York Stock Exchange, taking a short position on Nike when the market opened at 2:30 p.m. here in London. So we'll jump into that a bit later on, but first I'm going to go over why I picked this particular stock and show you how I analyse the earning reports in order to figure out what to do when the market opens. So let's do it. So earning reports, why do we look at these? Well, if you're day trading, then we simply need to pick a stock to trade when the market opens. But that can't just be any old stock. It needs to be one that is going to react in a predictable way in the first few minutes of when the market opens. And a stock becomes predictable due to the results of the earning report that a particular company has released on that given day. Now, this report will act as an indication to us which direction the stock is likely to go in when the market opens. And a good report is likely to send the stock up, and a bad report is likely to send the stock down. I prefer to trade stocks that have bad reports because I feel the effects of bad news are much more predictable than that of good news, i.e. fear is more reliable than optimism. And the way we trade bad news is by shorting the stock. Now, if you haven't got your head around shorting yet, it's basically where you make money when the price goes down as opposed to when it goes up. So what is an earning report? Well, every quarter, i.e. every 3 months, each US company releases their earnings report. And this tells us how they have done in terms of sales and revenue for the past 3 months. And they also provide guidance on the outlook for the months ahead. So different companies' reports are released every day for a period of 6 weeks, known as the earnings season. And there are 4 seasons each year. Now, during each day of the earnings season, different companies will release their reports. So Apple might release theirs today, and Amazon might release theirs tomorrow, and Tesla might release theirs next week. So we need to keep an eye on the calendar to see whose report is coming out today, because we only care about the reports that are going to affect today's market. Now, earnings reports are usually released a couple of hours before the market opens, which gives us time to analyse them and choose which ones we're going to trade at the market open. But some companies might release their reports at the end of the day when the market is closed, meaning we would trade those for tomorrow's market. So how do we know if the report is good or bad? Well, before the reports are released, expert analysts will forecast their expectations of how they believe the company has performed. And so when the earning report comes out and the results are released, we'll expect to see the news article saying that this particular company either beat the analyst estimates or that they missed the estimates. And this is what usually dictates the direction the stock will take when the market opens. So how do we find all this stuff out? Well, our very first job is to look at the earnings calendar to find out who's actually releasing their reports today. So let's open up the computer. Now, there are a number of different calendars you can look at, but I like to use the calendar on Tradingview. Links in the description. And now, to use this calendar, there are just a few things you need to look at. First of all, you're going to check you're looking at today's calendar. Then we need to sort the list according to market cap, because we really only want to be trading high cap stocks, meaning companies with the highest total stock value, as there's a lot of volume in the market for these companies. So we click market cap, and we have to click it a second time to put them in order from highest to lowest. Now we've sorted the list, I usually look to see if there are any companies that I recognise, as I like to trade well-known names for the same reason that there will usually be a lot of volume in the market for that stock. Next, I have a look to see when the report will be coming out. And to do that, I come over here to the time column, and if there's a sun, then it means the report will be coming out this morning before the market opens, and I can decide to trade that stock today. Or it will have a moon, meaning the report will be released tonight when the market has closed. And I can decide to look at that later and possibly trade it when the market opens tomorrow. So I know that Nike released their earning reports yesterday after the market closed. So let's have a look at that. So I need to click on yesterday, hit market cap twice to sort the order out. And now Nike is way at the top, as it is the most valuable company on the list today at 215 billion. So we look at the EPS, the earnings per share, and we see if they've beat the estimates. So we look here and we can see that the estimate is 76 cents and the actual reported is 90 cents. So that's a difference of 14 cents, or as they call it, the surprise. And that's a percentage of 17%, which is good. It means that they've done well on earnings. So next we go along the column and we look at the revenue. So we can see that they've forecasted an amount of 11 billion in revenue, but when the results have come out, they've missed it by $500 million, give or take. So they beat the estimates for earnings, but they missed the estimates for revenue. So this is what's called a mixed report. Now, I don't usually like to trade mixed reports as it could potentially go either way, but we can dive into this a little deeper and see if there's anything else that might give this stock a clear direction in which to go. So let's go back to Google, type Nike stock and click on the news. So let's just have a scroll down here. Let's have a look. So Nike shows mixed results as layoffs news follows after earnings release. Third quarter earnings report by Nike Thursday afternoon were mixed, a drop in revenue but dramatic increase in digital sales, as the retailer struggled with challenges from the pandemic. But bad news seemingly was about to follow when just a few hours later it was reported that the company also made a round of layoffs. So now on to our next job, and that is to see what's been happening pre-market. Now this is hugely important and really reinforces our analysis. So some traders will be active a few hours before the market officially opens. And when we see how that stock has been traded in the pre-market, it will tell us how the stock is likely to perform at the market open. So we go back to Google and have a look at the chart here. So we click on Nike stock and it brings up this chart, and this is what we need to look at here, which is the pre-market amount. And we can see that it's in the red, so it's down by 3% at 138.80. So that's shown us that the stock has been shorted pre-market, which is a good indication that the bad news has overtaken the good news basically. So this is down by 3%, which is good because if it had been down by any more than 10%, we could consider that stock to be oversold and it would probably then reverse back upwards. But 3% is a good amount. It reinforces our news and our analysis, and we can expect that stock to continue falling. So all in all, it doesn't sound great for Nike today. So that has made me feel pretty confident to take a short bias, i.e. I reckon the stock is going to drop in value, but I'm still going to be cautious because of the mixed report and plan exactly where I'll cut the trade if it starts to go against me. Okay, so that is our analysis complete. We've used the earnings calendar to find out what companies are releasing their earning reports. We've picked a stock and looked at their report and found out it was mixed, but with the added bad news of staff layoffs. We've then looked at pre-market information to reinforce our analysis and to check that it hasn't been oversold. And now what I like to do is write down my plan and prediction so that it becomes concrete and so I stick to it. And also so I can keep track of all my predictions over time and see if they've come true or not. Now we know when the market opens that this stock is likely to drop in value, so we're going to short it. Something we need to take into consideration is that the price is likely to jump up slightly when the market opens before it drops back down again. Now this might scare some people into thinking that their analysis is all wrong, but in most cases this jump in price is just other traders liquidating their positions, i.e. people that shorted in the pre-market and now taking their profits on market open, causing the price to jump slightly. So we just see this as a small correction and we wait for the price to reverse back down again. Now this is something that takes time to get used to, and so that's why we practice with the demo account for a minimum of 3 months before we use real money. And that's what I'm doing today, as this is only my 6th week with the demo account. So let's just wait for the market to open and hopefully our analysis and predictions will come true. So the market's just opened. Well, we've had a slight drop in the first minute, as you can see with that first red candle, and it's just pulling back now with that green candle, which is probably just short sellers in the pre-market liquidating their position. So we just wait for that, and that's our reversal, that's our position. And we just get ready to close this when we reach our target. So we're $60 in profit, and now that's a bigger pullback. That's probably what I should have waited for. Now this is just people liquidating their positions and it's causing the price to reverse, and that blue line at the top there is where I've marked out where I'm going to take a loss if it goes past that level, which hopefully it won't, but we'll just keep an eye on this now. Oh, it's getting close. If it goes past that blue line, I'm out and I take a loss. But I'm confident with my analysis, so I'm hoping this stock is going to behave and drop back down like it is. Look at that big wick there, that's a big price rejection. we're just going to keep holding this now, and then we're back in profit. $70, here we go. Just drop a little bit further and we're out. So it is starting to slow down here. It could be consolidating on its way back up again. But we're just going to keep an eye on the price action and not seeing too much bullish movement. So that was quite a bullish movement there. But there's lots of pressure on this stock to drop. Here we go. I might put a stop loss in here because I feel like it's going to drop further and I'm feeling greedy, which isn't good. So we hit $200 here, guys. So I'm going to put a stop loss in just to protect my profits. So I'm just going to whack that right there. It's probably going to hit it any minute, but we'll see. $230, we should take this now before it hits the stop loss, and it's hit the stop loss, so that's $180 there. I'm pretty happy with that. So there we have it, $180 for 4 minutes trading and about 10 minutes of analysis. The stock behaved in the way we predicted based on a few simple bits of information we found on a Google search. The real hard work here comes in the form of discipline. Disciplining yourself to know exactly when to close the trade if it goes against you. Disciplining yourself not to be greedy and to take the profit once you've hit your 2% of your trading capital. And disciplining yourself not to go back in to get more or revenge trade to get back your loss. Those are the hardest parts of trading, and once you can master those, you'll start to see really consistent results. But this can only be done with practice and by using a demo account with virtual money for a minimum of 3 months. As you know, this is my 6th week of trading and I'm still using a demo account as I haven't quite hit the consistency level that I'd feel comfortable with using real money. So, you know, if you don't master these things with a demo account, then in all likelihood you will blow your account and lose all your real money very quickly and end up wasting the opportunity of turning trading into something that could potentially change your life. So put the time in. And that is all I'm suggesting you to do in this video, is only use this method in a demo account until you're confident enough to make your own decisions. And of course, this method will never work out the way we expect all of the time. There are no guarantees in the stock market, and that's what makes it exciting. So we have to keep that in mind and be prepared to take a loss. Now I've hit my daily target, I've placed one trade, I've shut my laptop, and I'm going to go and get on with my day. Happy days! This strategy is all based on what Zed Monopoly teaches. He's got loads of videos on his YouTube channel, all based around this idea. So what do you do when earnings season is over and we don't have any earnings reports coming out until the next earnings season? Well, you can trade indices like the Dow Jones and the FTSE 100, but that's a whole other video for another day. So keep practicing, guys. Practice makes perfect, and patience is the key. Now in the next video, I'm planning to show how I keep a trading journal to keep track of my progress, and maybe I'll do another live trade. So don't forget to subscribe and hit the like button if you enjoyed the video, and I'll see you next time for week 7 of my trading journey. So I'll see you then.